What's up, everybody? Welcome back to another episode of Stocks with You. I'm your host, Ulises Herrera, and today, guys, we're going to talk about a few things. What happened in Workhorse? What happened in Oshkosh? What happened with the whole USPS scenario? We're going to talk about why I personally think USPS chose Oshkosh over Workhorse to build their new electrical vehicle fleet for the next 10 years. Spoiler alert, I think that Oshkosh got the contract because they're a more robustly established company with a track record that actually makes money and that actually has been producing vehicles and defense contract vehicles for the US for quite a while. So guys, we're gonna get right into it. I'm gonna dive into some light numbers. I'm gonna dive into the actual statement from USPS as to why they chose Oshkosh over Workhorse. This was a major blow to a lot of Workhorse stockholders. The stock dropped over 50%. Is Workhorse out of the game? Is Workhorse, done? I don't think so, but this is going to take a while for Workhorse to recover from. So if you're in the stock, it's really up to you. If you want to hold your money for quite a while, you can, but it may take you some time to recover from this blow. But I'm not saying the company's done. All I'm saying is if you believe in the company, hold strong. Guys, we're going to dive right into the numbers, and I'm going to show you why I think, Workhorse lost the contract over Oshkosh. And please stick around, guys. Don't forget to hit the subscribe button, the like, the notification bells. If you guys like this kind of content, please make sure to support the channel. It really helps me out. And remember, guys, I'm not a financial advisor. This is merely my opinion. This is just me, speculating, and this is not financial advice. So, all right, guys, without further ado, let's get started. Boom. This is the actual USPS news article from the USPS website, as you guys could see right there. The article reads, U.S. Postal Service awards contract to launch multi-billion-dollar modernization of postal delivery vehicle fleet. Oshkosh Defense will finalize the design of next-generation delivery vehicles, NGVD, delivering up to 165,000 US-built vehicles over the next decade. So this is actually a really big thing, guys. Obviously, as you guys could see, that's a lot of vehicles. It sounds like the US Postal Service has more than 230,000 vehicles that they need to revamp, meaning some of these vehicles are really old. They're over 30 years old. The USPS service workers have said that, of course, they're not very comfortable, that they're hot, they're small, and right here on the website itself, it says they will replace vehicles from the current delivery fleet, many vehicles that have been in service for 30 years. Now, some of these vehicles are getting 10 miles to the gallon, for 30 years. Think about how much money that's costing the U.S. taxpayer every day. That's you and me. That we're paying for that. We're paying for a 10 mile per gallon vehicle to be, driving around the city many times, a week. So that's a lot of money. So as we were mentioning, Oshkosh is gonna be obviously awarded the contract over Workhorse. Now, under the contract, the initial $482 million investment is a get started basically fee, so they can start to assemble 50 to 165,000 vehicles over the next 10 years. So this contract will be good for over the next 10 years. Now, notice that it says 50 to 165,000 vehicles, meaning there's still a remaining over 80 to 90,000 vehicles that are gonna need to be built from either maybe another company. Maybe Workhorse still has a shot to deliver some vehicles in the future for them. For right now, it doesn't look great. Obviously, for Workhorse, stock price has dropped over 50% because this was basically what Workhorse was relying on. They were relying on this revenue to make them a legit company, because as Workhorse is not exactly a company that has, you know, a track record for obviously making money, or, you know, obviously having, you know, major contractors like the USPS, USPS service, you know, to produce vehicles for them. So if you catch a contract like this, obviously worth millions and billions of dollars, that's going to be a really good thing for your company. Unfortunately, Workhorse did not get that. So this is some trivial stuff about, you know, what the cars are going to be like. And basically, so the NGDV vehicles will include air conditioning. They will include improved ergonomics, the most advanced vehicle technology, including 360-degree cameras, advanced braking, traction, airbags, which is very important for the safety of the postal workers, front and rear end collision avoidance system that includes visual, audio warning, and automatic braking. So yes, this is actually gonna, you know, improve the vehicles themselves. Obviously, most of you guys have seen how some of the vehicles out there are looking not as great. You know, they definitely look 30 years old. You look into them and it seems like you're looking into an old rusted bucket. Now, so, you know, this article right here explains exactly why, you know, USPS, you know, what USPS is going to be doing with Oshkosh, a U.S. defense contracting company that will start to produce these vehicles. I'm sorry, they will be rolling out the vehicles in 2023, meaning they're probably going to start to be working on them already. Now, what do I think that Workhorse is lost the deal? Because Workhorse actually is not a financially sound company yet. They're a very new company with, you know, new technology that is, you know, has something to prove, but the company itself is not very financially strong and has some outrageous price per sale share cost on the stock, basically meaning, you know, the company's making very little money and it has an insane evaluation onto what it actually is bringing. So these are the financials right here, Workhorse financials, you know, the income statements right here. The revenue they're bringing in, guys, as you can see, is very, very minimal. So as you guys can see here, in 2019 they brought in 377,000, basically nothing. 2018 they brought 763,000, still more but not anything really. 2017 we brought 10 million. In 2016 they brought $6 million dollars. So best year was 2017. You know, the gross profit, of course, they're losing money every year. Every year they've lost money since 2016. It's natural for a new startup company to lose money. Yeah, that's we're not holding that against them, but I feel like USPS maybe in the end didn't really see the technology that they had was maybe ready. You know, maybe they didn't think that, you know, a full electric EV vehicle fleet would make sense financially right now, because maybe Workhorse has not actually, you know, does not have the proper scaling to build all these vehicles and have charging stations for them. Now, as you can see, net income is pretty bad. They are losing money every single year. Now, they're barely making, I think they're going to be making less than $1 million this year. So that's not exactly looking great for Workhorse. So after the latest results, Workhorse are now predicting revenues of $130 million in 2021. Basically nothing. That's peanuts for a company that has a valuation of $1 billion. So it doesn't make any sense to value a company that only brings 130 million at over $1 billion, and actually over $2 billion before it actually crashed. Makes no sense, guys. Now here we go to Oshkosh, a company that's been around since 1917. As you can see, it started with a patent on a mission to build and innovate products that power global progress. Oshkosh Corporation was founded in 1917. There it is, 1917. I mean, these guys have been around longer than a lot of us. So the revenue they're bringing in, guys, it's crazy. It's really high. You have total revenue here, 6 billion last year. You have 2019 8 billion. You have 2018 you have 7 billion, and 2017 you have 6 billion. So it basically shows you how much in size Oshkosh and Workhorse differentiate, meaning these guys are an established player. These guys are not, just starting now. This isn't their first rodeo. So Oshkosh has been around for a long time. They're obviously bringing in huge amounts of money. And what's also a little concerning is that if you go to the insider interest for Workhorse, let's see, insider activity. Dun, dun, dun. More people are selling shares of their company than they're buying. So as you could see, a lot of people are selling shares at 35, aka that person made out good because the company was running $36 a share and it tanked to $17 a share just a few days ago. So this guy sold on the right time. Either he knew it was coming, or it was just very lucky timing. One of those two things. So some of these people, they made out great, and look, they sold at $35.97 a share. An officer of the company, and then we have another director. So it's interesting how and why that happened. These people sold out before the stock crashed. Did they know something? Who knows? Maybe they had insider knowledge that they were not going to get this contract, so they decided to cash out before their stock tanked. Lot less people are buying the stock than selling it. As you could see, 2 pages of buy and sells, you have 4 pages. So twice as many people are selling than buying in Workhorse. And in Oshkosh, you are not gonna see it's people inside the company selling as much as they're buying. So let's see here. Naturally, we're gonna probably not see that. So I mean, this is huge. I mean, as you guys could see, a lot of people are buying this stock at great prices. I mean, just recently, an officer in the company bought 7,500 shares at $66 a share. So when you have a lot of people investing in their company, it probably means that they feel good about the company and they feel that the company is going to do great. As you can see, almost nobody's selling their shares. 2 pages of people selling their shares, meaning all these people are selling. Not bad, okay, people have to sell, they have to make money, understandable. But look at the difference between buy and sell, guys. This is all buy. So these people are very confident in their company, very confident. And it seems like Workhorse the confidence may just not be there yet in the company. I'm not saying the company is not going to do great in the future, but also it seems like people within the company themselves are selling more than they're buying. So that doesn't exactly make you look all that great. Not saying I'm going to hold that against them, but it's something to think about. Now we have this right here where most analysts believe that, you know, this company is worth $118 to $140 a share. That's right around the price it's actually trading at right now, guys. And if we go to Workhorse, most analysts are not actually feeling all that rosy about Workhorse in general. So let's see what Workhorse. Okay, Workhorse Group, there you are. All right, so we have Workhorse here. The target price on the low is $15. On the average is $22. On the high, it's $29. And as you could see right now, the stock itself, let's see what the stock itself is trading at right now. So Workhorse stock price. So it's at $16.17 a share. So that's trading around the lower end, obviously, because of the bad news. Meaning, yeah, it has a potential upside of $29 a share. The company's gonna have to, no, I don't want to do this for free. The company's gonna have to basically step up their game, and it seems like they do have other contracts coming in to where it's gonna look good for them. But once again, they're gonna have to, you know, do some work. And as an investor, if you're holding these shares, you're either going to hold down until, you know, it comes back up to whatever you bought it at. And if you bought it any recent time, unless you bought it at the dip, you probably bought it when it was $25 to $30 a share, meaning you're down a good 20 to 30% easily. Now you could wait for the company to go back up, or you could, you know, take a loss. Personally, I would rather wait and then take a loss, but that's just you guys. And that's just my opinion on why I think USPS, right here, USPS, why they chose Oshkosh over Workhorse. You know what? And that's kind of my opinion. Now, once again, guys, I'm not a financial analyst or a financial advisor. This is just my opinion. This is just something why I think it makes sense to why, you know, Workhorse did not get the contract. Bam! So now there you guys have it. That's what I think is why USPS chose Oshkosh over Workhorse, because clearly it was more of, to me, it would seem to be an obvious choice. If somebody brought me two companies, you know, to provide me with a service, and we have one company that has a major track record, lots of money, good positive cash flow, good debt to equity ratio, and then you have a company who's just starting out, who has showing a lot of promise. Granted, most of the time people will go with, you know, the established name. Now, I'm not saying Workhorse is a bad company or they're not going to be able to make it. Workhorse has a lot of potential, you know, but at the end of the day, USPS chose, you know, the stronger contender. Do I blame them? No. Would I have done the same? Maybe, maybe not. I'm not in their position, but once again, this is my analysis. This is why I think, you know, USPS chose Workhorse over Oshkosh. Now, if you guys have any other feelings about why you think USPS chose Oshkosh over Workhorse, please don't forget to put them in the comments. If you guys have any, you know, questions, you guys can message, you know, write them in the message board, in the comment section. And once again, guys, thank you for joining us, and thank you for watching all this video if you made it through all the way.